Hello students, hope you all are doing great. I'm Machal Chaudhary, working as an assistant professor, BBA department in St. Andrews Institute of Technology and Management. So students, I'm back with my online lecture series of income tax. So students, it's your lecture number 1 from unit 4. So basically in unit 4 we have to cover the deductions from gross total income, assessment of individuals. So these both topics are included in your unit 4. And today we will cover the income tax assessment of individual, computation of total income and related provisions, quantum of rebate, and computation of total income and tax liability of an individual. So we will cover all of these topics today. And in between of the video, I will also share some important topics whenever I feel that these topics are related like important with respect to your examination. So I will tell you in between the videos. And also after the every video, I will also share some numerical questions, or you can say some theory questions with you whenever I feel like these questions can be asked to you, or some of the questions which has been already asked to you. So I will discuss all of them, and also we will share some we will do solve some numerical portion also. So let's get started. So first topic of the day is assessment of individual. So students, first of all, before computing the income, total income of an SSC, first of all we should have an idea like how to assess the individual's income. So if there is any kind of rebate, or if there is any kind of deductions available for that, so that should be included in that particular SSC's income or not. So basically what we can say that it's a kind of a process of collecting and reviewing the information which is filled by the SSC to know what will be the amount of income tax which will be paid by the SSC. So let's understand this topic in detail. Income tax assessment of an individual. So let's first understand what is individual. Individual means a simple person, a human being, either male or female, living identity. Basically, for the income tax, we don't consider whether a person is male or female. Here, all the human beings are considered as same. In case of minor, assessment may be made on the parents, guardian, or trustees. Whenever a person is a minor, then in that case what will happen, the tax will be levied on the his parents, guardian, or any trustee which is involved in with him. And an individual is taxed not only on his income, total income, but in some cases he may be assessable on some of the other person according to section 60 to 64. Basically, as I told you, if in case of minor, or if there is any kind of other like condition, so in that situation the SSC will be taxable for other person's income also. And we will discuss these things in later in video. So here first thing we have to ensure that is individual meaning and the minor assessment individual. Computation of total income and the related provisions relating to an individual are as under. So these are the conditions, or you can say provisions, which you have to fulfill. First is income earned in individual capacity. Income earned by an individual will be shown in the different heads of the assessment, like income from salary, income from business, income from capital gains. So all of these are shown under the different heads. So whenever you are going to compute the your total income, so that should be shown in your different heads. Next is your as a member of partnership firm assessed. If the firm pays all the taxes related to it, the partner need not to pay it again. So it's a condition in your partnership. Whenever a partnership firm pays all the kind of taxes which are levied on the business firm, so then in that case partner should not need to pay it again by his individual payment. Next is as a member of association of person. Income from such association is includable in the individual total income at a normal rate of such income. So it will be there will be a tax levied on the normal rate. As a member of a company where an individual is a shareholder of the domestic company, any dividend paid on or after the 1st April 2003 is exempted in hands of the shareholder under Section 10, subsection 34 of income tax. So in income tax it is mentioned whenever an individual shareholder receives the dividend from the domestic company, then it will be exempted. If a total income of AOP is not chargeable to the tax, then no rebate of tax is allowed. If a income is not chargeable, it's understandable कि अगर कोई income chargeable ही नहीं है, then how can you expect the rebate? How can you receive the rebate, right? If the AOP is chargeable to tax at maximum marginal rates, the share profits from AOP is fully exempted. And last is your dividends from foreign company. Those dividends are fully taxable in the hands of the shareholder. No rebate will be given in such condition. Next is quantum of rebate. So it's very important to understand about the rebates also. Like when an individual will receive some sort of rebates. So well, with a view to provide tax relief to the individual taxpayers who are in lower income bracket. Basically, the person or individual who is in lower bracket, he will be provided with the rebate. So the Act has provided rebate from the tax payable by an SSC if the following conditions are satisfied. The SSC should be an individual. He is resident in India. His total income does not exceed rupees 3,50,000. So the rebate will be equal to the amount of income tax payable on the total income for any assessment year, or rupees 2,500, whichever is less. Computation of total income and tax liability of an individual. Assessment of individual. Basically, these are the steps for the assessment of individual's tax liability. You should have a proper knowledge regarding these steps, then only you will be able to compute the total income of a particular person. Step 1. Compute the total income of an individual under 5 heads of income on the basis of his residential status. Students, as I told you that there are 5 heads under the income tax. So first of all, you have to identify the income which will come under which head. Then step 2 is income of any other person if includable under section 60 to 64 will be included under respective heads. If there is any kind of any income which is related to other person apart from the like individual, then under what head that income will be included. Next is your step 3. Set off of the losses if permissible while aggregating the income under 5 heads of income. Then third step is to set off the losses. If you are able to set off the losses in the current year, then you will set off those losses first of all. Then if you are not able to set off such losses, then you have to carry it forward. Next is carry forward and set off of the losses of past years if permissible from such income. As I told you, next step is to carry forward that asset that loss, sorry, and then you have to set off the losses of the past year. If there is any kind of loss which is below like carried forward from the previous year, then you have to adjust it in your current year. Then step number 5 is the income computed under section 1 to 4 is known as gross total income. The result which you will get from the step 1 to step 4, that is will be your gross total income. The balance income after allowing the deduction is also known as total income, which will be rounded off to the nearest rupees 10. If suppose the gross total income is rupees 12 lakh 502 rupees, then you will round off that figure into 10 rupees. Next is step number 7. Whatever the total income you have earned from the step number 6, then you have to compute the tax on such total income at the prescribed rate of tax. Then next step is to divide the tax. Next is step number 8. Allow rebate of maximum rupees 2500, which is given under the section 87A in case of resident individual having income up to rupees 3,50,000. So whenever you are having a income of up to rupees 3,50,000 and the person is the resident person of India, then in that case he will receive a rebate of rupees 2,500. Step number 9. Add surcharge at 10% on total income if it is exceeding rupees 50 lakh and up to rupees 1 crore. And if the income is 15% of such income, if that income is exceeding rupees 1 crore. If it is between the 50 lakh to 1 crore, then you have to add the surcharge at the rate of 10%. And if it is exceeding rupees 1 crore, then you have to add 15% of surcharge. Then after that, you have to add education cess as 2% and secondary higher education cess at 1% on the tax. So whatever the amount you got from the step number 9, then on that amount you have to calculate the education cess and senior higher education cess. Then step number 11, you have to give the relief which is mentioned under 89. So all the deductions will be given. In step number 12, deduct the TDS, advance tax paid for the relevant assessment year, and double taxation relief under the section 90, 90A or 91. So these all you have to deduct from your computation after the step number 11. So that's how you have to calculate your total income which is liable to for the taxability. So students, that's it for today's lecture. In next video, we will continue your unit 4. So here is a question related to today's topic. Explain in detail computation of total income under Income Tax Act. So you have to solve this question and I hope you are clear with today's lecture. You don't have any doubt, but still if you face any difficulty in understanding any concept, then do let me know. I will help you with your doubts. Thank you so much for your time. Stay tuned for more videos.